my exclusive interview on thought leaders. The impact of volatile crude oil prices on consumers' purchasing power with Rustin Mercado of China Bank Securities. The second phase of this week's staggered fuel price hike takes effect today. Shell, Petron, Caltex, and Sea Oil have raised prices by 2 pesos and 60 centavos per liter for diesel, 1 peso and 75 centavos for gasoline, and 2 pesos and 40 centavos for kerosene. Meanwhile, other firms will implement their second tranche tomorrow, Friday, June 27th. In total, this week's increase amounts to 5 pesos and 20 centavos per liter for diesel, 3 pesos and 50 centavos for gasoline, and 4 pesos and 80 centavos for kerosene. The staggered price hike began on Tuesday, June 24th, because of the heightened tensions between Israel and Iran and the threat of disruption at the Strait of Hormuz. As of current, global oil is trading nearly close to its level before the conflict escalated. The Energy Department says if the trend holds, a major rollback is possible next week.
For the past 2 days, bumaba ho talaga ang price. In fact, ang estimate namin, rollback ho tayo next week. Sa 2 days pa lang.
2 days.
Oo. Ngayon, hintayin natin ng Wednesday to Friday dahil hindi ho tayo sigurado kung matutuloy. Pero kung tuloy-tuloy ang pagbaba, sa tingin ko pa lang ngayon, malakihan din ang baba.
Oil prices recovered this Wednesday after a sharp slide on the back of strong U.S. demand. Brent crude rises by about 0.1% to settle at $67.68 a barrel. West Texas Intermediate climbed by about 0.9% to close at $64.92 a barrel. And Dubai crude has remained steady at $69.12 a barrel. Global crude prices have declined to new lows in just 2 weeks, or since June 11th, 2 days before the Israel-Iran war erupted, practically erasing all of the gains since then, as you can see here. As Mike Ricofort of RCBC points out, oil is now hovering between $65 and $67 per barrel, similar to the level seen shortly before the attacks began on June 13th. This is a rare complete retracement of oil's upward trend since the war broke out amid the softer global demand conditions. Meanwhile, prices have found support from government data showing huge drops in U.S. oil inventories. Crude stocks fell by 5.8 million barrels from last week, while gasoline inventory slid by 2.1 million barrels, the highest since December 2021. Analysts forecast that oil prices will consolidate at around $65 to $70 per barrel. And taking a look at oil futures, both Brent crude and West Texas trading higher by about 0.1%, with Brent currently sitting at $65.66 or $66.55 a barrel, and West Texas at $65.04 a barrel. And officials from the U.S. and Iran will meet next week for direct talks as the Trump administration disputes a leaked report revealing Tehran's nuclear program was only set back for months. At the NATO summit in The Hague, U.S. President Trump cited his efforts during the 12-day conflict, including airstrikes on Iranian nuclear facilities and the ceasefire deal. Trump said U.S.-Iran talks are already set, though he doesn't mind if an agreement comes up or not.
We're going to talk to them next week with Iran. We may sign an agreement. I don't know. To me, I don't think it's that necessary. I mean, they had a war, they fought. Now they're going back to their world. I don't care if I have an agreement or not. The only thing we'd be asking for is what we were asking for before about we want no nuclear, but we destroyed the nuclear. In other words, it's destroyed.
Trump officials took turns in criticizing the initial findings from the Defense Intelligence Agency revealing that U.S. strikes only set back Iran's nuclear program for 3 to 6 months, not years.
The 30,000 pounds of explosives and capability of those munitions it was devastation underneath Fordo. And the amount of munitions, 6 per location, any assessment that tells you it was something otherwise is speculating with other motives.
The conversion facility, which you can't do a nuclear weapon without a conversion facility. We can't even find where it is, where it used to be on the map. You can't even find where it used to be because the whole thing is just blackened out. It's
Right.
gone.
It's wiped out.
It's wiped out.
Are fuel subsidies really helping the poor? With a few weeks to go before President Marcos's fourth State of the Nation address, we spoke to Center for Excellence in Governance Chairman Dr. Jesus P. Estanislao, and he challenges the wisdom of government fuel subsidies and calls for smarter and market-based solutions amid global oil shocks.
It doesn't make sense for us to subsidize. We have to make the markets work. See, the moment oil prices go up, and we allow oil prices to go up, people will look for ways and means by which they can save. Now, obviously, they cannot do that 100%. So they'll have to suffer a little. And that's why we have a stake in the Middle East conflict. We have a stake in what Iran will do if they're going to keep open or close the Hormuz Strait. So we are part of that war. And whether we like it or not, we possibly are going to be affected in a bad way.
We will, because we're a net importing country.
We are net
So
importing.
in this scenario, Doc Jess, what would you then recommend as a whole of nation approach? Just getting everyone together, practicing good governance in the way of surviving or even thriving under this kind of escalating Middle East tensions that raise the price of crude oil.
Cathy, let me step back a little bit. When I was in government, our economy was growing at 1 or 2% because we had to do quite a lot of squeeze. But by the time we left, the economy was already growing 5 or 6% during the Ramos administration. And it is the level at which we've been growing. And we've kept it because of the openness that we have given to the Philippine economy. OFW, business processing, outsourcing, and shifting our economic base from sugar and coconut to IT-related products. Okay, that has been done. We're growing at 5-6% per year, which makes us one of the fastest growing economies in Southeast Asia. Many Filipinos don't do that. Is that enough? My answer is no. We have many other resources which we can tap, which will enable us to grow from 5-6% per year, easily 8-10% per year. What are those resources? First, our people resources. I was talking about upskilling. Many of our high school graduates can be upskilled and immediately put to work with Philippine industry. And as a matter of fact, Lufthansa uses the Philippines as a resource base for their technicians. They had an extension office here in Manila because they found Philippine labor very good. And they brought many of these Filipinos to Frankfurt. Now, this is one thing which we need to do, build on our human resource base. And if we do that, easily you can grow 6.5-7% per year. The bigger challenge is, what do we do with our vast land resources, which we are not using, our sea, our marine resources, which we're not using, our water resources, which we're simply allowing to, and all of these things. Through coordinated public and private sector, we can make the Philippine economy grow by 8 or 9%.
Catch the full interview on Long Conversation, Thought Leaders, only here on One News. And you're watching Money Talks, coming right up. Rustin Mercado of China Bank Securities Corporation talks about the reduction of the stock transaction tax taking effect next week. And in world news, over 80,000 have been evacuated because of flooding in southwest China. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. President Trump is looking into naming a new Fed chair who will replace Jerome Powell as he continues to disagree with his interest rate decisions. Powell still has 11 months in his term. And while the president is not bent on firing him, he plans to announce his successor this early to allow the chair in waiting to influence investor expectations and steer monetary policy. Those in the running include former Fed Governor Kevin Warsh, National Economic Council Director Kevin Hassett, and Treasury Secretary Scott Bessent. Trump has repeatedly lashed out against Powell for refusing to ease rates as the Fed chair adopts a wait-and-see posture. U.S. presidents often announce a new Fed chair in 3 months before the incumbent steps down. U.S. markets ended Wednesday's session mixed as the Israel-Iran ceasefire holds. The Dow falling by 0.25%. S&P 500 remained unchanged, with investors waiting if it can return to its all-time high of 6,144. And the Nasdaq rose by 0.33%. Benchmark 10-year Treasury yields have moved a little, settling at 4.294%, and gold prices have notched up at $3,327 per troy ounce. Stock futures little changed, but pointing to slight gains when the U.S. markets open later tonight Manila time. The Dow, the S&P, and the Nasdaq are all up by less than 0.1%. As for Asian markets, they're looking mixed in the first hours of trading. Investors continuing to weigh the Israel-Iran ceasefire. Both Australia's ASX 200 and South Korea's Kospi are down. The ASX by less than 0.1%, the Kospi by 0.6% decline, and Japan's Nikkei 225 rising by 0.8%. Let's take a look at our own markets. And the PSCI has opened this Thursday higher by nearly 0.25% at 6,340. Stock markets returned to the 6,300 level yesterday, Wednesday, rising by over 0.5%. Local counters in the green except for financials and industrials. Net value turnover was at 4.31 billion pesos, lower than the year-to-date average of 5.69 billion. Meanwhile, the Philippine peso opens today slightly stronger at 56.65 to the dollar. Pesos rebounded sharply against the dollar yesterday, closing at 56.71. More reasons to invest in the Philippine stock market, even in a volatile environment, as stock transaction taxes come off. From July 1st, the Philippine Stock Exchange says the immediate reduction of the stock transaction tax to 0.1% from 0.6% will take effect, a much-needed reform that will boost trading and liquidity in the stock market. With us now for more is Rustin Mercado, Research Director of China Bank Securities Corporation. So good to see you again, Ras. Thank you so much for joining us.
Thank you for having me.
You know, I asked you just before the midterm elections what the catalyst might be, and I know you mentioned this acronym, and it stuck. It really stuck. It was SIMEPA. And right now, we're just about a month away, or a week away, in fact, for what you see as a game changer.
Yep.
In what way?
So, of course, one of the reasons why we like SIMEPA is that our notion is that it should improve the activity in the market, right? So I think just to illustrate the point, I'm gonna churn out some numbers here. So if you were an investor, for example, and you have 1 million pesos invested in stock XYZ, for example, a round trip buy sell is gonna cost you around 1.2%. So that's 12,000 pesos, right? So with the reduction in the STT from 1.2, that drops down to 0.7. So from 12,000, that becomes 7,000. So if you zoom out and then you look at what the volume is in the market, so I think our average daily turnover year to date is north of 5.5 billion. So let's just talk about the hard round number of 5 billion pesos, right? So that would translate to every day a savings of around 25 million pesos. Right, and then
savings on whose part?
On
the investor?
sellers, yes,
the seller.
yes, because if it's daily turnover, it's one seller selling to a buyer, right? So
the seller gets more proceeds.
yes, so let's just 25 million in savings for the seller, assuming that that seller reinvests that into the market. Let's just say, for the sake of being prudent and being practical about it, it's a 25% reinvestment rate of the savings, not the whole 25 million is reinvested, right? So that 6 million, which is 25% of the 25, gets reinvested every day, and that kind of snowballs, right? So when we ran the numbers, that gave us the impression, or at least our estimate points to average daily turnover improving by close to 30% or over 30% between the end of this year and the end of next. So that is kind of a practical appreciation of what this law or the passage of Simepa could do to market. So that's what we're excited about. Hopefully, we see that happen. Their investment rate hopefully is more than 25%, and hopefully that's going to be enough to attract foreign funds in troves as well.
So theoretically, it really impacts a full ecosystem from the seller, the investor, to the regulator, and to the whole capital market development, because we're all coming down to friction costs. I mean, I often hear about the friction costs and how high it is compared to the ASEAN average. How does this make us competitive then?
Well, certainly we've come off a pretty high number, right? So relative to where we are in the region. Are we the lowest in the region? I think we're still not the lowest, but it's certainly progress towards that. And I think when you're talking to potential investors, that might be one of the things that get flagged, right? Or that's a concern. So having this come in is certainly something, it's a positive development. And that's one less reason for foreign funds to kind of think and reconsider their investments in Philippine equity markets.
Especially when they see that Simapa really means Capital Markets Efficiency Promotions Act. So really that word, the operative word there is efficiency. To my understanding, it also impacts and also enables the creation of new products in the market. So what sort of an impact would that have on the programs that the government has in deepening our own capital markets?
Well, I think overall, if you have deep capital markets, right, if you have a fairly robust stock market, this encourages enterprising individuals or group of individuals to tap capital markets for potential listings, right? So that, in a way, could broaden economic activity. Of course, those businesses, once they scale out and they get access to capital, this will entail more jobs for Filipinos. So overall, it should kind of help move that ball in that direction. It's essentially a step towards making sure that this is not just something that's relegated to the stock market, but it could eventually be something or foster a more inclusive business environment for uplifting the lives of everyday Filipinos.
That it has a multiplier effect that impacts the economy as a whole, but it's coming at a time that we're seeing a lot of volatility out there, global oil, the Fed. How then does this play into how risk appetites are measured? We have something positive going on in our own capital markets, but then a lot of negatives out there.
Okay, so I think first off, you mentioned that we did see a complete retracement from June 12, and that was really buying because of what was happening geopolitically in the Middle East, right? So that's a sigh of relief. What was worrying us really was that it could be there for quite a period of time, but now that it's come off, it's not too much of a concern now. And I get what you mean, that there are prevailing uncertainties and that's dampening investor sentiment, but I think it's also important to kind of take a look at where we came from in the first quarter. Earlier this year, we were concerned that changes to U.S. tariff policies would really lead to a knock-on effect in terms of risk appetite, growth expectations. While some of that did materialize, right, I think earnings expectations have kind of come off their highs earlier this year. The U.S. it had, but I think that's slowly starting to pick back up. So I think we are moving past the peak uncertainty with that, at least for now, because I think nobody could come close to the peak of April 2 when everybody was like, okay, we expected 10% baseline, and then we saw the huge numbers that were levied on some countries, right?
But I thought we were just approaching that. The end of the tariff pause is in July 9th.
Yeah.
So I was thinking that might be the peak, but you're not seeing that.
Yeah, well, it's encouraging to see that the U.S. is striking deals with its trade partners, right? So that kind of gives you the idea that they're looking to negotiate that. And hopefully what we see at the base case is that the 10% global tariff might be the one that will be status quo, but then if that's levied across all countries, then that's kind of just moving the baseline a little bit. So there's one risk. The other is the dollar peso, right? So the dollar strength earlier this year was kind of a concern for some foreign funds investing in the Philippines because they have to factor in potential depreciation into their total return, right? So now that the strong dollar narrative is diminished, even if we did see that safe haven buying recently, the DXY is still down, right? So that's one less risk to think about. So overall, you have these receding risks compared to where we were the first quarter on a week-by-week basis. I know it's hard and it's difficult
It
because
it's tiring. Eh?
yeah. So we've been glued to our monitors and what's happening outside of the Philippines, right? So,
But there must be a lot more clarity now in the second half, now that we've seen how the Bangko Sentral has acted. So how much of a continuing maybe support will that be for the second half, and which counters would you invest in if indeed equities would be the space to put the money?
yeah, so we're seeing the BSP easing rates. That's partly because inflation has been pretty low, and I think the outlook is that it will eventually come into within target, right? So, on the consumer front, so on the things in the equity market, sectors we like, consumer still looks like it's a pretty good second quarter, and hopefully that continues through the rest of the year. So, I guess when you kind of we took a look at it, it's not really the times when inflation is coming down that you see that resurgence. It's really more on when inflation comes off a high and it stabilizes, and we're expecting to continue seeing that. Utilities still in vogue at this point. I think that's kind of the defensive part of things. What's interesting to us is that telcos are they've come off the highs, and those are high dividend paying stocks, right? So them coming off to us means that maybe investors aren't really looking too much at dividend yields at this point. So that might mean there's improving risk appetite for other sectors, or probably more cyclicals. So it's spotty across the sector, but so much so because different companies are affected by different policies. But overall, I think those are the nice sectors to be in or have exposure in through the rest of the year.
All right, we'll keep an eye on those sectors for the full second half. Thank you so much for
you.
joining us.
Thank you for
Ras
having me.
Mercado of China Bank Securities Corp. And coming up after the break, Pope Leo appoints Brother Armin Luistro to a key Vatican post. Keep it here on One News. Talks. I'm Cathy Yang. The Local Toll Regulatory Council, or LTRC, has approved the new toll rates for the 8.9 kilometer Cebu-Cordova Link Expressway, or CC-LEX. Starting July 1st, motorists will pay 65 pesos for Class 1M vehicles or two-wheelers. Big bikes and light vehicles under Class 1 will be charged 100 pesos. Class 2 vehicles will pay 200 pesos, while Class 3 vehicles will be charged 300 pesos. However, these rates are still lower than the actual approved toll fees, which are 7 to 21 pesos higher. CC-LEX says the full implementation will be done in phases to ease the burden on motorists. The toll hike is part of a government agreement allowing adjustments every 2 years. It also helps recover construction costs during the pandemic and Typhoon Odette. The CC-LEX, now the longest bridge in the country, is operated by Metro Pacific Tollways. MPTC and Signal, the owner of this channel, are both part of the MVP Group. Congressman-elect and businessman Leandro Leviste is set to raise over 34 billion pesos from selling his shares in SBU Energy Corp, or SBNEC. Niviste, who was elected congressman of the 1st District of Batangas, is divesting most of his shares in SBNEC before assuming office on June 30th. He agreed to sell a total of over 14 billion shares to Meralco's power gen unit MGen for 18 billion pesos. That's on top of earlier sales to public shareholders worth 2 billion pesos, bringing the total to over 20 billion pesos so far. Despite the sell-off, his company will still hold 8 billion shares in SBNEC. Here are the headlines from around the globe. In the Netherlands, NATO has agreed to increase military spending at the behest of U.S. President Trump, who has been pressing allies to spend more on defense since his first term. Members will raise their spending to 5% of their GDP from the current 2%. After years of branding NATO allies as freeloaders, Trump has publicly committed to adhere to the pact's Article 5 that an attack on one is an attack on all. But the president threatened to come up with an expensive trade deal with Spain after its prime minister vowed to spend no more or less than 2.1% of the country's GDP on defense. In China, at least 80,000 have been evacuated in the southwest province of Guizhou. The province has been enduring heavy rainfall for days now, as well as surging upstream inflows that triggered devastating floods. The government has already allocated over 100 million yuan, or nearly $14 million, to support disaster relief to restore key infrastructure and public services. And in New York, a 33-year-old assemblyman is the Democrats' presumptive nominee for New York City mayor in the November elections. Zohran Mamdani rattled the political world with his upset victory over former New York Governor Andrew Cuomo in the Democratic primaries. Mamdani has pledged to make NYC more affordable, though some criticize him for his far-left policies. Cuomo, who resigned as New York governor in 2021 over a sexual harassment scandal, has conceded defeat, but he is considering to run in November as an independent. Incumbent NYC Mayor Eric Adams will also run as an independent. If Mamdani topples Adams, he becomes the city's first Muslim mayor. And before we go, there is a new role of service for former Education Secretary brother Armin Luistro, this time from the Vatican. Pope Leo XIV named Luistro to the Dicastery for Institutes of Consecrated Life and Societies of Apostolic Life. That is according to a Vatican bulletin released Wednesday, June 25th, Manila time. The Dicastery oversees and guides the practice of evangelical councils and the life of consecrated and apostolic communities across the Latin Church. Luistro is the first Asian to serve as Superior General of the Institute of the Brothers of the Christian Schools, popularly known as the De La Salle Brothers. The order runs several schools in the country, including De La Salle University. Luistro previously served as the president of De La Salle Philippines, the nationwide network of La Salle schools, and as education secretary under the late President Noynoy Aquino. Congratulations, Brother Armin. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.